How to buy US stocks from India. There are 19 stock exchanges in the world, with a market capitalization of more than $1 trillion. These stock exchanges accounted for more than 87% of global market capitalization in 2015. Nasdaq and the New York Stock Exchange have more market capitalization between them than the rest of the exchanges on the list combined. Global investing enables you to access investment opportunities that are not present domestically. Developed markets like the US are home to some of the world's largest tech companies, something you cannot access by investing in India. You may even choose a theme or a combination of multiple sectors. We created this guide especially for you, the Indian investor, to help you better understand how to invest in the US stock market from India. After watching this, you will understand 1. How to invest in US stocks. 2. Good things to know when investing in the US stock market. 3. Why it may be a good idea to invest and diversify in the US stock market. 4. Popular terms used when discussing the US stock market. Can Indians invest in the US stock market? Yes, investors from India can invest in the US stock market. If they are interested in diversifying beyond Indian stocks and financial instruments, beyond the Sensex or the Nifty 50, Indian investors can do so by investing in the S&P 500, Dow Jones, Nasdaq or other US-listed companies. Investing in US stocks or ETFs by Indian investors is permissible under the RBI's Liberalized Remittance Scheme, LRS, by using purpose code S0001. Fun fact, you can also open US bank accounts under this purpose code. Why should Indians invest in the US share market? 1. Superior returns compared to India. By investing in the US stock market, an investor gets the profit, dividend, or both that an investor receives on his or her stock market investment in India. The US stock market return is higher in comparison to the Indian stock market. The New York Stock Exchange not only lists corporations in the United States, but also companies from throughout the world. Investments in US stock help you get a good US stock market return as global companies are there and the return you get will be high, contributing to various factors. In addition to equity returns, the savvy investor should also think about the effect of currency fluctuations between INR and United States dollars. In the past 10 years, the rupee has depreciated 44% compared to the United States dollars. This has a significant negative impact towards returns of Indian stocks, widening the performance gap. Also, investing in the US stock market has offered superior returns. 2. Exposure to other international stock markets. Investing in the US can be an easy way to invest in other international markets. For example, you can easily invest in the Chinese economy through investing in the US market. The fast-growing Chinese economy, driven by a growing middle class and rapid technology adoption, has led to the creation of some of the world's leading technology companies. However, instead of going public in China, more and more of these Chinese technology companies are choosing to list in the US. Furthermore, there are ADRs, American Depository Shares, of Chinese companies that enables United States dollars-based buying and selling, where the underlying shares are held by multinational banks or brokers. For Indian investors, another benefit of investing through the US stock market is that the ecosystem is very well regulated, with strict controls on financial reporting, transparency, and standardized governance practices, making it easier for the investors to evaluate the different opportunities. 3. Invest in a fraction of US stock. You may hold US equities in fractions, unlike in India. After all, owning a single share in Amazon is out of reach for most people. You may buy a piece of the company for as little as Rs 5,000 or even less. With limited money, you can collect more or construct a portfolio of US equities over time. 4. Diversifies your portfolio. Companies across the world are listed on all of the major US stock market, making it a promising investing destination. When you invest in US stock market, you not only invest in global companies, but you also diversify your investment portfolio. A national emergency might bring the index down. However, the effect would be minor. Indian corporations, on the other hand, dominate Indian indexes. Even minor turmoil in the country might cause the indexes to plummet. The stock market in the United States is diverse, and it has proven to be resilient in the face of hardship. In the case of India, however, this is not the case. How can I invest in the US stock market from India? What are the different ways I can invest in the US stock market? Invest in US-focused international mutual funds in India. Unlike the brokerage method, there is no investment limit for residents of India, as investments are made within India using rupees. However, this approach can be more costly. You must keep in mind that the expense ratio, fees charged to manage the fund, for these funds tend to be higher since the fee is for both the general management of the fund plus an additional expense charged by underlying international schemes they invest in. For example, the Franklin Templeton Feeder Fund in India invests in the Franklin Templeton US Opportunity Fund. The feeder fund charges 1.54% expense fee, which is on top of the fund. How are Indians taxed for their investments in the US stock market? When you invest in the US stock market from India, there are two types of taxation events: taxes on investment gains. You will be taxed in India for this gain. Taxes will not be withheld in the US. The amount of taxes you have to pay in India depends on how long you hold the investment. The threshold for long-term capital gain is 24 months, with the rate of 20% with indexation benefit. If you sell a stock in less than 24 months, capital gains are considered short-term and are taxed according to your income tax slab. Taxes on dividends: unlike investment gains, dividends will be taxed in the US at a flat rate of 25%. Fortunately, the US and India have a double taxation avoidance agreement, DTAA, which allows taxpayers to offset income tax already paid in the US. The 25% tax you already paid in the US is made available as foreign tax credit and can be used to offset your income tax payable in India. How do I fund my account? Since investments in US equities must be made in United States dollars, you must remit United States dollars to your brokerage in the US before you can start investing. What are the brokerage charges? Different entities charge different rates and have different structures. For example, brokers might charge a fixed fee per trade or charge a percentage of total trade or total asset. Since the investing process requires international transfers from rupee to United States dollars, in addition to any potential brokerage fees, there might be other fees that investors incur in order to invest in the US. These fees could be international wire fees or FX conversion fees that the investor's bank charges, which may vary depending on the bank that the investor uses. How much can Indians invest in the US stock market? In accordance with the LRS, an individual can remit a maximum of US $250,000 United States dollars per year for investments. The brokerage approach typically involves overall lower costs for the investor, but requires you to wire funds to the US. As an Indian resident, you are allowed to do this per the Liberalized Remittance Scheme, LRS, where you are allowed to invest up to US $250,000 per year per person.